All right, so welcome in everyone for those that are tuning into the stream and for those that are tuning in to the recording. Today is going to be day, let me just double check, I lost count. Day 23. So the final 3 days of the boot camp. And today being the third day of the S tier chart breakdown workshops, where I break down some of my favorite charts that I've seen play out in the past. With day one being focused on distributions and textbook short breakdowns, day two being accumulations and breakouts and textbook longs that I look out for, and then today is kind of a bit of both, with mainly talking about mean reversions, mainly parabolic shorts, but also some parabolic longs that I have seen play out and I have traded personally. So here on the right hand side, I also have one more name on that. On the right hand side here, I have some of my favorite mean reversion trades that I've traded in my lifetime, with a very, very big focus on gold. I think you guys have heard me say this in the past multiple times. Gold last year was made up for 1/3 of my year-to-date P&L, which is crazy to me due to a couple of reasons. It wasn't because of longs on gold, even though gold, just as you can see, from the start of 2025 to the end, it's 2024. Yeah, so from the start of 2025, oh my god, guys, I'm sorry. I don't know why I'm tripping. From the start of 2025 and back here and onwards, you can see that that gold has literally just gone straight up, basically without much consolidation. And one would think that this did provide some very, very clean long opportunities, and it definitely did, with quite a few breakout opportunities that obviously led to massive winners, with this kind of base breakout here being the main one. However, the way that I approach this is I was waiting for parabolic shorts to be setting up, and every time that they did set up, I was all over them. Before 2025, funny enough, I had never traded gold before. I was always focused on stocks. I was never really interested in trading metals, never really cared about gold, never attempted it. But then as gold started to move and as I started to see a lot of headlines start to come in and a lot of extreme kind of euphoric times, I began to think that this could potentially be setting up for some opportunities for the parabolic short. So within this massive run up, I've caught quite a few tops. Some came with losses, but most came with wins. So kind of a few tips to trading the mean reversions. First and foremost, right, I want to say this. Mean reversions are extremely difficult. That's the first thing I want to point out. Okay? I do not suggest that traders go out there and begin to trade mean reversions, right, and focus on them. They are not the best setups. And for a true mean reversion, right, a true textbook mean reversion to set up, you really need some sort of parabolic move. And I just simply ask yourself, right, how often do we really see parabolic moves in the markets? And by parabolic, I mean really, really parabolic kind of euphoric moments, right? Whether that's to the upside or to the downside with kind of max fear flash crash type of events. And the answer is not often, right? So trading them is extremely difficult. The second point is that they are rare. Right? Especially the textbook S tier parabolic shorts / longs. Those are very rare and they do not set up very often. The B tier mean reversions, right, where it's kind of something like a name is slightly extended, it's starting to show signs of distribution, you're kind of shorting it off the highs, watching if you can potentially bid into some sort of puts, right, to catch some sort of reversal, or if you're doing the same thing but vice versa, so off the downside, kind of slowly bidding into calls and looking if you can catch some sort of bounce. Those setups, I want you to keep them on the side for now. Those setups might be good, right, but they are not setups that you want to be focused on, right? Instead, you want to simply think about mean reversions as the parabolic shorts / parabolic longs when they do set up, because those ones are without a doubt worth an attempt. Of course, with practice, right, and with a proper system that you can use in order to properly trade them. But they won't set up that often, right? So for example, you guys might think that they are slightly often happening a bit more often just because this year in 2026 we've seen the metals going crazy, right, with gold and silver, and now Bitcoin setting up a mean reversion of the lows. 3 opportunities of parabolic attempts in a month is extremely rare. Don't think that this is something that is normal. It is not. Last year we didn't see that many opportunities. We did see a few in gold, and then we also saw a massive QQQ parabolic long opportunity. But other than that, I can't really think of any other last year in 2025 that were really textbook. So I just want to point that out there and start off today's session by mentioning that they are hard and they are rare, right? But when they do set up, and I'm not talking about the mid-tier ones, kind of the B plus or even the A plus mean reversion. No, I'm talking about the absolute S tier parabolic opportunities. And when I'm talking about parabolic, I mean the reversion of post parabolic move, right? So the parabolic move to the top and then that flash crash that comes with it, or the flash crash that comes right with a parabolic kind of I guess you call it like price just water falling down, and then the V recovery off of that. That's the move that I'm interested in, right? And one thing also to note, right, before I really dive into the setups, is that our goals as traders should not be to be fully focused on these mean reversions and waiting for them to set up, right? If you really want to advance your trading level, right, and really be capitalizing on the best moves, then ideally what we want to do is that we want to position ourselves into those mean reversions. And what I mean by that is, for example, right, let's take a look at gold. And when gold set up this top up here, which led to a 8% sell-off in 1 day or 2 days, this setup up here was definitely very profitable, right? It was a very massive move. But I will say that this long from back here, right, was without a doubt a much bigger and much easier move to capitalize on, right? So just something to think about whenever you are thinking about catching these parabolic shorts or parabolic longs, is that you want to kind of try to position yourself into them if you can. Of course, sometimes things might go parabolic without any true setup, but if you can do that and then you roll those profits into this, right, now we're talking next level trading. All right, so I just wanted to point that out there. So the setups that I have, the names that I want to focus on for this session, I'm just going to start off with gold, silver as of recent, Bitcoin because it had a nice mean reversion off the highs. It wasn't the most textbook setup, but it certainly was still one. And then today it's also setting up one, and that's why I wanted to talk about it. MSTR and the top that I had in 2024, late 2024, that one was insane. And then QQQ April bottom, I'm sure you guys all remember that. That was also one of the craziest moves I've seen. So let's go ahead and get started with gold. So the first trade attempt that I took on gold, trading this kind of parabolic short / mean reversion, was actually back here on April 2nd. Now on April 2nd, this wasn't necessarily a parabolic short on an S tier level, right? It was setting up more so for a mean reversion, right? Because we didn't really see any of the most important signs that I want to look out for on a true S3 parabolic short, right? The volume here was definitely high, right? You can see it was some of the highest over the last year or so into this top, but nothing that was significantly kind of climactic, right? So this was more so of a clean mean reversion attempt that did work, and I did capitalize on it. And I do remember my execution. If I can just go back. I remember taking starters on Wednesday, where I initially did get squeezed out in after hours, but then in pre-market we reversed that entire move. And this was a big win. And this was really my first attempt on any sort of mean reversion in relation to gold, and even my first gold trade. So started off with a nice win, and then I believe I held some more into the next day, which filled this sort of the small gap from back here, where I took the rest of my position off. The true kind of the big gold short that really set me up was actually this one up here on April 22nd. This one was a very, very textbook move with a very big squeeze out that came before it. So initially when I was trading this back here, I initially thought that this was going to form some sort of interim top. Right? I would have thought that this top was going to hold, right, and price is potentially going to start some sort of downtrend or kind of consolidate and move lower, or maybe just chop around, but certainly not make a new high. However, price did do that, and it started to gap up, right? And this is one of the most important things to be paying attention to when trading parabolic shorts or parabolic longs, right? You really want to be paying attention to breakaway gaps. And breakaway gaps just simply mean that price gaps up or gaps down, right? And doesn't pull into that gap, right? You don't see a gap fill, maybe a small dip sometimes, but essentially price just gaps up and follows through the whole day. That is what a breakaway gap looks like. So we get one off of here, and then we get another one, and then a third one. So after I got the three gap ups in a row, volume was definitely on the higher side, right? It wasn't necessarily a textbook a textbook parabolic short, because it had just come off of a pullback, right? So number two that you want to be paying attention to, sorry, not number two, but another thing that you want to be paying attention to is also what price was doing prior to the parabolic phase, right? So the parabolic burst higher, which is essentially this. If price pulled back, right, and then went for that parabolic burst, then it could still be setting up for some sort of mean reversion, but usually it's not going to be the most textbook parabolic short. The most textbook parabolic short is going to be price just trending higher and then gets a burst at the highs. That sets up for a much larger reversion. So as you can see, even here, it's evident in the price action. We got a 1.5% sell from back here, right? It was a nice opportunity, but nothing that was really, really textbook. And then things got crazy with yet another gap up, which I personally didn't see coming. I wasn't sure what was going to happen from back here. I did attempt it throughout these kind of 3 days, but it wasn't any big loss. It wasn't a big one either. It's kind of just either a small loss or a small win, something around that. Now, I really got interested in the trade after I saw this gap up. I was like, okay, let me try this again. So this is the first gap up, right? Now I want to see another gap up above this, right? And the next day we didn't really get that, but a day later, on after the weekend, actually this was a long weekend. Yeah, there was a long weekend. I'm not really going to be aggressive into a long weekend, right? I'm just going to wait for that to end. And we get another gap up, right? And one thing to take note of as well is the weekly gaps. Whenever you see a new week gap, right, that gap can sometimes hold more value, right, or at least pull price in easier than if it's just a normal gap. All right, so if it's a gap, for example, that closed, if price closed on Friday and then a gap up on Monday, or a gap down on Monday. So we get the gap up on Monday, right? And then this is when I start to look at price again for a parabolic short. So if I go down into the smaller time frames, you guys will see my exact execution. I remember this trade like the back of my hand because this was a new record day for me at that time. And I just remember it was crazy. I think we had some sort of, maybe it was FOMC on the 22nd. I think we had some sort of event. I might be mistaken though. So Monday, right, we get the kind of day of just the chop higher right after the big gap up and prices move sideways. I'm not really interested in taking the short just yet. I'm now interested in it the next day. And how do I execute off of this? I simply mark out the high of day, and I'm hoping for some overnight burst higher, right? Just like I was hoping for the breakdown lower today on Bitcoin. Then after hours, I was looking at the same thing here, and we did get that. My execution is simply a breakdown, right, back under the previous day's high and some sort of rejection. I took a starter off the open, which you guys will tend to see me do on these 5-star S-tier parabolic shorts, is that I'm always going to take just a feeler position off of the open. And by feeler, I mean, let's just say I'm looking to buy 10 contracts. I'm simply going to buy 2. Right, so I did just that, and then we initially got some follow through, and then from there, what do we get? We get some sideways action back into the previous day's high as well as the opening print. So I mark out the opening print. You guys should know the way that I execute by now. I mark out the opening print and I'm taking ads up into it, right? And I'm risking that high right there. If this gets taken out, I'm out of my position. Price begins to consolidate and then gets a leg lower. However, on this leg lower, I am not interested in trims, because I know how big the setup is and I know how much room we have to move lower. All right, so this move was really nothing that I was interested in trimming. I held on to my position into the next day. I think actually what I had was I had some weeklies on this day, so I think I did trim some weeklies, or maybe they were 1 DTE. I'm not. I just know that I had 2 different contracts. One that were more leverage and closer dated, and then one that was, I think, after the weekend. So I think I took a small trim on the weeklies, and then I swung the rest of the position into the next day. We got a big gap down the next day, right? When you get that weak close on a parabolic short, you're more likely gonna get continuation the next day, unless you get a very, very climactic kind of capitulation move off the highs. That's gonna be different, right? Because volatility has just expanded so much. That's more likely going to contract the next day. But if it's instead just some sort of topping action with a intraday sell, then there's a higher chance of an actual gap down the next day. So we get just that, and price is now down 5% from my entry. And the puts were doing, I think the weeklies were up about 700%, or the 1 DTEs, and then the others were up like 250, 300%. So certainly a very, very massive win. And into my first TP on all of these parabolic attempts, which will always be the 9 or 8 day EMA. It's just a spot that I'm always looking to de-risk because, as you guys know, I've talked about the first test into something. Whenever you see price breaking out, right, and it hasn't tapped a certain moving average over, let's just say, after a big impulse move, then the first test into that moving average will likely hold, even if it's just for a day, right? It might not hold over the next week, but you're more than likely gonna find some sort of buyers there at that level or at that moving average, and that's what we got here. So I took, I think, most of my gains on this day, and yeah, that was my first attempt. And then over the next few days, just consolidated and then got another breakdown, which I was not involved in. But yeah, so this was actually a new record day for me back here, April 22nd. I don't know why this keeps happening with Discord. But yeah, so this was my new record day back here on gold, and something I was very, very happy with. But yeah, so from there, I wasn't really interested, right? Because once you do get that initial climactic top, right, and you do get that initial a climactic parabolic short, chances are the price is probably going to consolidate, right? You could potentially look to trade some sort of lower high, which is what we kind of got somewhere around here, but it's not usually the best because you don't really have the signs of distribution playing out yet, right? Always remember, guys, mean reversions are something, parabolic shorts have nothing to do with distributions. Sometimes names can begin to distribute during parabolic shorts. I've seen that happen quite often, but always make sure that you are differentiating between the both and you're not thinking that, okay, this is a mean reversion is something that I'm going to look to buy leaps on, for example, or look to buy a lot of time on. To me, I don't think that's a good idea. Instead, with mean reversions and parabolic shorts or parabolic longs, I'm positioning myself in very short dated contracts and I'm using the leverage on those to capitalize on a big win. So I'm just interested in that initial snapback move, which is going to juice your premiums quite a ton, right? And you can catch a very, very big win by doing that. And then as my target gets hit, I have no remorse of holding. I'm going to trim out, right? I'm always going to leave a runner or two, yes, maybe a fourth even as runners, but I'm always taking a good chunk of my profits off right as I see my premium begin to juice and begin to really, really go. So from there, we didn't really get anything else that was really climactic that I was interested in. Instead, what we got was a massive, massive breakout on gold, which I remember being just a week early on. I was interested on July 25th. I think it was on this day, or it might have been July 16th. It was one of these days where I was interested in a gold long. I was just actually a month early into this massive, massive breakout. So we get this massive breakout, and within the breakout, we do set up a few parabolic shorts that I did take some losses on. Right, starting with this one from back here. I believe this is not a real wick. Yeah, it's not a real wick. I do remember trading this, took a kind of paper cut on it, but certainly you can see that this definitely had some potential to play out. Oops. We had a very climactic look. All right, this wasn't the best parabolic short, and the reason for that is because it's just coming out of this breakout, right? This is not what a textbook parabolic short is going to look like. You can never expect something that has just recently broken out to be a textbook S-tier parabolic short. Instead, this can set up for a mean reversion, but not an S-tier parabolic short. An S-tier parabolic short, which is what we want to be focused on, is going to come after we've already had that massive breakout and we already have been trending up higher for a couple of weeks. So always keep that in mind. But if you look at the daily, right, definitely see some signs of, or at least some characteristics to at least attempt it for a mean reversion. Unfortunately, though, it did not work out, and I took some sort of paper cut or maybe a small loss on it. From there, price began to kind of trend higher. Again, no true look of any climaxes yet. And then we get into the weirdest, oh no, it wasn't the weirdest. We got this day here on October 9th, which I do believe I was also trading, but again, yeah, another paper cut. And the reason for that is because I was looking for, I think it was the gap down here. But with the gap up the next day, I had to cut it. So let's just say I took ads off of around 372. And it wasn't anything serious, but again, you see the climactic action. I thought that this would work, and it technically did work for one day. But I was looking for continuation lower, which I didn't get the next day, so I just had to stop at break even. And thankfully, it was the right decision with a big gap up the next day, which leads us into the big parabolic short number 2, which was actually one of the trickiest ones that I've ever seen play out. So price goes parabolic yet again, right? You get this parabolic burst, and now we are looking slightly more extended, definitely a lot more extended on the weekly time frame, right? So you compare this up here to down here, big difference. And now price has been green for 8 weeks in a row. You see the highest weekly volume ever on gold, on the gold ETF, and that is definitely a sign of gold topping, right? So we get a big gap up, consolidation kind of here, another gap up, and yet another one. with the largest move of this entire kind of parabolic phase being at the highs. This is also very, very important to take note of, right? So you want to be paying attention to the size of expansion of the bars at the highs. When you see the expansion increasing at the highs, right, that is when you want to be paying attention to it the most. And that's what we got up here, right? This day at the highs was a 2.3% day, which was almost the highest. It was kind of tied with this one, but the highest intraday. So market opens up and we get the same thing that I always look out for, which is that final kind of overshoot in after hours, right? You'll see this happen time and time again. And then sometimes we pull back in pre-market, other times we hold up. But what I do is I take a starter off the open and then I wait for some sort of consolidation. I believe I didn't take enough ads here though, because I wanted this to consolidate slightly higher, which we didn't get. But I was still positioned. And it was Friday, so I was positioned in next week puts. One position was the Fridays that expire, 7 DTEs. And another one was actually, I don't know if it's considered a 3 DTE or a 1 DTE. It expired on Monday. I'm guessing it's a 3 DTE after the weekend. And the Monday attempt that I took, I was actually risking 100% of what I put in. That is something that I don't usually do. But sometimes when the opportunity sets up, right, instead of taking, for example, a $1,000 position and risk 10% on it, which is a $100 risk, I'm simply going to take a $100 position and risk 100% of it. So my risk is technically the same. And that's what I did here with the Monday expiration. Was it Monday or was it Tuesday? It was something kind of midweek. I don't remember. It might have been... all I know is one was on Friday and one was earlier than that. And on this one, I actually got extremely lucky because I'll show you guys now on the chart. This can just load. So we get the initial leg lower, right? And then what happens on Monday is that we actually gap up higher. So on this gap up here, I was like, what just happened? I had no idea this was coming, right? I would have thought that this is going to stick and it's going to move lower. So I ended up taking a loss on my Friday contracts at about, I think it was 30% or something like that. But I held my shorter dated ones, which were, I think, expiring the next day. And funny enough, you get a massive gap down the next day. So this one, I'll admit, I got completely lucky, right? However, it was part of the plan for me to risk 100% of my extremely shorter dated one, right? Which did play out in my favor in this case. Looking back at it, I don't regret stopping out on the Friday contracts because this could have easily gapped up yet another day, right? You always have to keep in mind with those during parabolic phases, the worst can happen. Right as you think that the stock can't go any higher, it can. And just as you think price is going to bottom here, it can't go any lower, it can, right? So always remember that and always be positioned for that to potentially happen, right? That's why I can never take so much size on these parabolic attempts. Sometimes I still do, which is a mistake. For example, gold, 2 weeks ago, I was oversized in it, which was a mistake. Thankfully, it played out in my favor, but it still is a mistake. You never want to oversize in them. Instead, you want to size smaller, but take something that is shorter dated, right? So you can capitalize on that leverage if the move does play out. So in this case, it ended up selling from Monday to Tuesday low of about 7%. And the smaller expiration trade actually ended up running, I think it was 700 or 800%, which offset the losses of the 30% from the larger position on Friday. That was expiring on Friday. From there, price kind of pulled back, and then I wasn't really interested in trading it up until the craziest move I've ever seen in my life last week. This was honestly, I mean, without a doubt the craziest move that I've ever seen, right? You guys always have to also understand the asset that you're trading, right? I'm not looking at MSTR here. I'm not looking at Ethereum. I'm not looking at an SMCI. I'm looking at gold, right? With the market cap of 35 trillion, moving 20% in 8 trading days. So what we got on gold here was just something straight out of a textbook, starting with the initial short trap. So heading into this kind of before the parabolic burst, I didn't have my eyes on gold. I was actually more interested in silver during that same time. So around January 16th. During this time, I was actually attempting silver shorts at this time, which I'll break down next. And in the meantime, gold did something that I think screwed a lot of traders, and that is it set up quite a few bear traps along the way. So heading into this week, right, heading into this big gap up on Tuesday, gold is clearly still trending up higher, right? It's getting extended above this initial top that a lot of people thought was going to top out gold. And it's starting to look kind of exhaustive, right, into this week. The next week opens with a 3.6% gap up, right, on this day here. And what happened on Friday was what I'd like to call a short trap. And the reason for that is because price was looking exhaustive here, setting up for a pullback, and we do get a 1 day pullback here, which probably a lot of people thought was going to be the top, right? So if you go down into the smaller time frames, you can see why some people would think that gold has potentially topped out, right? And this is going to follow through. But instead, what happens is price pulls into the gap, right? We have this bull gap from up here. Volume pours in at the lows, and price squeezes back up into close. Not squeezes, but gets bought up into close. Market closes on Friday, and then the next day we just get an insane gap up of 3.6%. So a lot of short traders that are trapped, which would end up being used as fuel for a short squeeze in the following days. And during those following days, the same thing sets up again on Wednesday with another gap up, right? And price now looks like it can definitely set up for a parabolic short, right? And we do get some sort of intraday movement, but nope, bought back up again. So you get a bear trap here where short sellers are trapped, and then you get another one up here. And what are all of these shorts doing? They are setting their buybacks probably right about high of day. So once high of day is taken out, the short sellers that poured in here are going to be buying back the stock. Right? They're buying back gold. And that just adds more fuel for price to continue on higher. So price starts to look something like this. Now we are on Friday, so the week has ended. I'm still haven't attempted it, right? I'm scanning over the week and I'm like, wow, what a week on gold. Gold just had a 8.9% week, which was the highest weekly gain since the entire run up. As I mentioned, size of expansion of the bars at the highs / lows. Let me just add that. When you see that, you can understand that there's a chance that price is going to top right around here, and this is the final kind of parabolic burst. So we get that, and then now price is up 1, 2, 3, 4 days in a row. Another sign of potential for an S-tier setup. Monday the market opens, and what happens on Monday? We get a gap up of 2%. So a lot of traders at this point in time, right, have blown up, shorting down here, getting squeezed out, reattempting it here, and getting squeezed out. Monday comes, or is this Monday? Sorry, shorting it down here, getting squeezed out, shorting it down here, getting squeezed out. Monday comes and this is on their third attempt. And usually traders would like to attempt things for 3 times, right? It's just kind of, I don't want to say human psychology, but that's just how the average trader most likely feels, right? They're not gonna attempt something after their third try. So on the third try, right, they're coming into the market, they're thinking kind of aggressive, like, okay, fine. Gold gapped up yet again on Monday. This has to be it. So they pour in and they wait for a breakdown to show up. Intraday, this day here. And we get just that. We get some sort of sell-off intraday that, guess what, gets trapped yet again. Where are the stops set? Right at the highs. You see what happens once we break the highs? Squeeze out, right? Because everyone that poured in short late down here is getting squeezed out and they're buying back. Which leads us into Wednesday. So now into Wednesday, price is looking absolutely insane. Like some price action that I've never personally seen in my lifetime. We get a big expansion bar of 2.7% that closed at the highs. And then another one of 4%, which also closed at the highs, right, with a breakaway gap. All heading into the psych level of 500. So you guys always want to be paying attention to those psych levels. It is not a coincidence that a lot of these mean reversions and opportunities set up at those levels, right? Because everyone just has their eyes on those levels. The volume is looking very, very climactic. You can measure the distance from the 8-day, all right, very, very extended. And now we're getting towards the end of the week. I can't replay the weekly action before the move. But yeah, so I actually took a starter on gold on on this day back here. I took an attempt on it. So I attempted it on Tuesday into close. As I saw the squeeze, I was like, okay, I think they're gonna squeeze everyone out into close and then gap us down the next day. I thought that had some potential. Let me just try it with some lighter size, right? Something that I'm willing to lose on. Next day, we get a gap up. My contracts are down like 20%, I think. They weren't weeklies. They were expiring next week, I believe, the week after. So I had some time on them. So intraday, what do we get? We get some sort of sell action here where I take an add-on and then price kind of just reclaims the move. So I'm like, okay, I'm going to cut it. I cut the position, so now I took my first loss on gold. Price then extends up above high of day into FOMC. This was the FOMC bar that came in. We get the FOMC reaction. I wait for some sort of pop and I add some shorts down here. So this is my second attempt. Doesn't play out. I cut it. Paper cut, essentially a 5% loss, nothing that I was worried about. And price ends up squeezing out yet again into close. So you can think that there are even more short sellers that are trapped down here. Which leads us into Thursday. So market closes and what do we get? We get a big burst in after hours, which was wild because we got a squeeze out into close followed by a massive burst. So at this point in time, with another burst the prior day, right? So at this point in time, we have a from the previous day's close into the overnight move, an 8% move on gold. That's about 3 trillion, right? The market cap of a Max 7 name in the span of 24 hours or 30 hours. So I see that, I'm like, wow, this is it, right? This is gonna be the one. Right, like this is actually gonna top out here. And what do we also have? We have the 500 level overshoot, which is another key part of these attempts, right? I want to see these psych levels get overshot, right, with price getting kind of really pushed above it, and then a reversal from there. And that's what we get in after hours. I go to sleep and I'm just thinking to myself, I'm just gonna sit and hope that this overnight burst higher holds into open, because if this holds into open, I'm gonna be all over this. Maybe we'll sell overnight, I don't know. I'm just gonna wait until market opens and hope that this does hold up. So what do we get? Price consolidates right into open. Off the open, I took an ad. As I mentioned, that's how I attempt these trades. So I take an ad off the open. And funny enough, although I do say to always avoid it, I was actually watching the 1 minute time frame back here. So I take my initial starter off of the open, right? Which was rather a larger position, but I still had room to double down. I mark out the opening print, and I'm using that as my initial risk for this position. If the opening print gets taken out, then I'm gonna simply wait for the pre-market highs to get tested into and swept for me to reattempt this. But we don't get that. Instead, we get some confirmation with some early selling, followed by some bounce, followed by some consolidation. I take my next ad on this bar right here. And I was also testing out the VWAP from back here. And funny enough, that's exactly where price stalled out and rejected. Something that I'm still testing with, specifically for mean reversions of parabolic shorts. So I don't want to talk about too much about it just yet, as I don't have that much data to support what I'm saying just yet. But essentially, I was just watching for some of this sideways action here to break down. So as I saw this kind of a price start to reject, I take another ad, and from there, price just absolutely begins to waterfall. And the biggest, I believe, intraday move that gold has ever seen, or at least in the last like 2 decades or something like that. From the open down into the low of 8%. So as we begin selling, I'm not trimming my position just yet. My initial take profit is at 475, which is right there, with my main one being at the 8-day, which was slightly under it. So I'm watching price and I see this big sell bar come in on this bar here. I'm like, okay, wow, this is happening. Right, you can clearly see it in the speed of how quickly this is moving. I'm okay, this is happening. I get up, I leave my desk for a couple of minutes, and I come down, I just see this next bar come in, and I open my broker and I begin to refresh it, and I'm just seeing my premium absolutely spike. I refresh an extra 50%. I refresh another 50, another 50, another 50. I'm like, what the hell is happening? And then we get this massive sell bar of 5% in one 10-minute bar. As I see this begin to sell, I'm taking profits. We fill this gap and I begin to take a lot of profits off the table. So I begin to realize my position. Let me just go back to my actual trade so I can see my exact execution. What day was this? The 29th. I can forward these alerts to you guys, just so if you guys are interested in seeing my minute by minute execution. But yeah, so I took a third off open, and then I added some more 5 minutes into open, so on this bar, and then I added on 41. So that's into this bar, I believe. So off open and then into this, and then more here, and then more down into here. And then my first trim came out the 30 minute, 28 to be exact. Wow, the exact low. Guys, I'm not making this up. I know, I mean, I'm pretty sure you guys all trust me, but I'll share the exact executions with you guys afterwards if you guys want to see that. My first trim on this was this exact candle here at 1028. And the contracts that I had were next week's and 1 DTEs. The 1 DTEs, I ended up closing them for 400%. And then the next week's, I began to trim them at around 250, I think, or 300%. and then I left 3 runners. My last trim was 37 right here, and then I left three runners that I eventually ended up taking off the table as price got bought up into close, which might have been a mistake because the next day I saw this large wick, right, and I didn't think price was gonna move higher. I thought that price was gonna consolidate within this daily bar, but instead the next day we got an insane move, which would have put my contracts up well over a 10x. I think the 1DTEs ran like maybe a 30x. I'm not even sure what they ended up running at because they were, I think they were the 480, I want to say, or 475 strike. So at this low here, they were like 40 bucks in the money. But yeah, this was my new record trade, and that was only on this day here. So I was all out by close, and just an insane trade. You guys have any questions about gold before I move on? That ended up taking quite a long time. So the way that I like to do it with parabolic shorts is I like to be leveraged with shorter dated contracts. So usually I'm looking to capitalize on 1 to 3 days of action because that's when the premium is going to be really juiced. And after that, what tends to happen after kind of 1 to 3 days of action is price will begin to consolidate for some time and then maybe set up some sort of distribution that will play out over the next couple of weeks and then gets a large breakdown. So the way that I like to approach it is I want to capitalize on that first parabolic move off the highs, right? And then wait until if in a couple of weeks price sets up for another breakdown. I'll show you an example with MSTR and SMCI next. I know sometimes you might kind of think that, okay, but what if this is the top for, let's just say, a couple of weeks or a couple of months? I can capitalize on that. Technically, yes, you can capitalize on that very well if you're trading commons, right? If you're shorting commons or you're longing an inverse ETF. But with options, I much rather take my profits, right, and secure that premium juice, and then look to reposition myself later on. Also, guys, speaking of, Bitcoin is working very, very nicely. I don't know if you guys saw my post, but I started some buys in Coinbase in after hours, and it's up 6% overnight. So certainly a very, very nice opportunity here that is playing out. Yeah, so this is a parabolic long on Bitcoin and Coinbase. It's basically the same sort of setup that we saw on gold, just on the opposite end. Yeah, you can see my live analysis on my live prep channel. I posted the chart. I didn't get enough. I didn't get all my charts done in there, but I'll do that probably tomorrow. But yeah, so next up we have silver, which I caught on Monday, January 26th. This wasn't my best trade because leading up to it, I took quite a few losses. I attempted this 5 times, and on the fifth attempt, I finally got a big win, which did make up for the initial losses. But looking back at it, it wasn't anything that I was super proud of. The attempts did make sense, right? I'm sure you guys can take a look at this weekly chart prior to the final liquidation. It certainly did have quite a lot of opportunities that were setting up, with the first one being on Friday the 26th, which I don't remember trading. I remember attempting it actually slightly later on Tuesday, but this wasn't anything that was really textbook. It was more so kind of a mean reversion, which did play out initially. And I did catch my first trade on this to be a win of about 70%. And then my second attempt came on the 13th, which ended up being a loss. And then I got chopped up here. I took a loss on Tuesday. So that was my third loss. And then my fourth loss came on Friday. No, not my fourth loss. Sorry, my fourth attempt came on Friday, which was a loss. And then I took the weekend to plan everything. I was like, okay, I've taken 4 attempts on this. Overall, I'm down 3 losses, 1 win. I'm not feeling good about it, but I was like, you know what? The market doesn't care about that. Let me just stick to what I know and stick to the analysis. If we get a gap up over the weekend, then this is going to set up for another opportunity. And we got just that with this insane gap up of 7% over the weekend. And the way I executed it is the same as always. Took a starter off open, and then I waited for some more ads, started adding on these pops that were failing, and lucky enough for me, the IV was getting juiced in my favor, so the put premiums were actually going up, even though price was also moving higher, which doesn't happen always, but sometimes at such euphoric levels it can. And then we got the big reversal, which I took ads on, mainly with, so prior to that, I had next week's, the weeklies would have gotten crushed on this pop. But then when I saw that high volume here pour in, right, off of this reversal of the highs, I took some weeklies, I believe, or it was maybe a 1DTE, something that was shorter dated, and I caught a massive 5x win on those. And my weeklies ended up running like a 2 or 3x, I want to say, on that. And then I took a good chunk of profits near the close, which was nowhere near my target. But just because I got my ass beat prior to that, I was like, let me just lock in some of these gains while still holding a good chunk into the next day. So the next day, we do get an initial sell-off that recovers. So I was like, you know what, I'm just gonna take this off for now, and realized my win, which was a nice win that did make up for the initial losses. But looking back at it, I did fumble by taking it off. At least I should have took it off and then looked for a reattempt, because what ended up happening was it continued higher with big bro gold, right, into gold's liquidation. So silver was actually happening prior to that. And then we got another big sell-off, which was similar to the initial one that we got, but this one was just a lot faster. And then another kind of wick. And then the massive day that I'm completely missed out on actually came on Friday. So looking back at it, I definitely could have executed a lot better on this, and I learned a lot from this. Especially with my initial attempts from back here that didn't really make sense. Like, sure, they were okay mean reversions, but they weren't textbook S tier parabolic shorts. This was the one, right? And this one was also one which I did capitalize on, but this is where I should have been involved. And unfortunately, I wasn't. Silver ended up selling off 37% in 2 trading days. And then I think he ended up even making a new low today. But yeah, just an insane chart. Another thing is, look at the 100 cycle level, right? We overshot that. A lot of people were talking about looking at the futures charts. I kind of was, but I wasn't giving it too much attention, because I didn't want that much noise. I was just more so focused on SLV. Same thing with gold, but gold also overshot the 5K level, and then also the 5.5K level when it finally topped out. But yeah, so you want to be paying attention to those levels, the psych levels. Another thing that you can also take a look at is the inverse ETFs, which will usually see some very climactic volume point at the lows, which is what you got here. This is ZSL, which is a silver short. If you look at, I think it's UGL. No, not UGL, GLL maybe. Yeah, gold, same thing, highest volume ever down here. But yeah, so that's gold and silver. Bitcoin is what is setting up now. Fear is that sentiment is horrible on Bitcoin. We are down 30% in 8 trading days, with the largest down day being yesterday of 15%, or today technically for you guys. It's just past 12 for me. Right into this kind of buy zone that I have marked out. It's something that I'm taking too much kind of thought into, but it's just the level that I have marked out, with it being kind of these previous highs that I'm kind of interested in, where I can see price potentially stalling out. We got some of the highest volume over the last couple of years, with IBIT, the Bitcoin ETF, printing the highest volume ever at the lows. Right, this is all very important stuff. And then we got the little execution that I was looking for, which was an undercut in the overnight session. I didn't go with Bitcoin or with IBIT. Instead, I traded coin, and I started my position at 150, and to close right here is when I bought the initial position. And then in the overnight session, I added more off of 143 or 144, with an average price of 147.70, which is now in profit as it's trading at 152 in the overnight session. And just like I'd be targeting the 8-day on a parabolic short, I'm also targeting the 8-day for my initial TP on this. If you want to flip the chart, this is what it would look like. So pretty textbook stuff. Also swept the April lows in after hours, and it's down 13 or 12 trading days in a row of 40%, with the largest down day coming at the lows. So the largest expansion at the lows. I am in comments in this one. Wasn't really interested in trading calls. I think I will be tomorrow, depending on what I see overnight. But yeah, that was Bitcoin and what it's setting up now. MSTR is also potentially setting something up now, but I'm more so interested in talking about this. And AR, to answer your question about the time and how I like to trade, this is a textbook example, right? So MSTR set up a textbook parabolic short off of this high, where it sold off 31% in one day off of from high day to low of day. And then over the next couple of days, it just kind of chopped around and consolidated. Didn't really make any true progress. It did sell off here, but relatively speaking, it consolidated for 17 trading days before getting this leg down. So throughout that time, if you're in options that are expiring slightly shorter dated, your options are going to get cooked, right? They're going to decay very quickly. If you're trading commons, right, obviously you can hold it for a lot longer, but I much rather just take my profit on this day, or maybe hold some runners into the next day, and then look to re-short it down here for another breakdown trade. But this is just another textbook trade, and again, another overshoot of a psych level at 500, with the biggest gains coming at the highs. You see this breakout, and the weekly gains just increase as we move higher. Highest volume ever bars at the highs, climactic daily volume, multiple days up with a double breakaway gap here at the highs. And then intraday, it set up some nice opportunities. This is going to take a while. with again that overnight thrust higher and before eventually topping out. This chart is very, very similar to SMCI and the top that it had. From back here. And this is also another great example of someone that, for example, would have thought that SMCI is going to top out on this day and let's just say pull back down into the 50 level, right? They would have made money on the initial day and the next day, but they would have gone squeezed back out the next 2 days later, right? And then would have been underwater in a couple of days on this move. So I much rather take my profit here as my target gets hit. And then if I want to still think that this is going to break down and be the top, then this is likely going to set up some sort of distribution, which is what we got here with the failed breakout, the lower high, and then the breakdown here, and then another kind of redistribution type of look before this massive sell-off. Next up, we have QQQ and the parabolic long that it had from April 7th. With obviously one of the greatest opportunities that I've ever seen in my life. We're talking about the NASDAQ here selling off 15% in 3 trading days with a 1, 2, 3 breakaway gaps to the downside, which again you don't see often, after a big downtrend off the highs, with the largest expansion bars coming at the lows. Right into the 400 cycle level, slightly above it, but close enough, with climactic volume as well. The way that I traded this was I actually bought starters near the open. I was never able to get sized heavily on this, but as we saw some sort of flush down off the open, I took a starter somewhere around here. And then as we began to push back up, I took some more ads. And then we got the 90-day tariff pause announcement, which squeezed price all the way to the highs, where I took my profits for, I think it was like a 4x win on contracts that expired in like 2 weeks or something like that. So an insane move. And then the next day, the day after that, we got an even bigger candle, which I wasn't positioned in QQQ at this point in time. Instead, I was actually in Apple due to the undercut that I had the previous day. But regardless, textbook mean reversion longs on both QQQ and Apple that set up just insane opportunities that should definitely be studied. That pretty much sums up today's session in regards to mean reversions and parabolic longs / parabolic shorts and what I look out for, and some of the textbook charts that I've personally traded, with those being the main ones. Again, gold being my favorite, and then the others that follow. You guys got any questions? All right, if not, I'm gonna go ahead and pause the recording here.